we're already seeing layoffs universally in the tech industry. They're letting go of 10 to 15% of the workforce. In 1991, I launched Money Mall USA Corporation, my own financial services company, literally A to Z of real estate.
For those entering the workforce now, what advice would you give to stay relevant?
They don't have to be technicians and scientists and engineers to learn artificial intelligence tools. There's free education available. There's a huge shortage of engineers that can do this work.
On how you see AI shaping the next generation.
So we're at the cusp of a new industrial revolution. Any change is going to be powerful. It's almost like when companies installed huge robots on assembly line. So instead of having 1,000 workers, they installed 5 robots that started to do their job, but with less mistakes. No matter what we do, no matter what industry we are in. And if you can do that consistently, that would be amazing.
Hello, everyone. Welcome to another episode of Simple Tech Talk, where we dive into the transformative impact of AI across various industries. I'm your host, Johnny Palumbo. Today, we have a fascinating guest joining us, Sid Jain. Sid is the CEO of Money Mall USA, where he leverages over 3 decades of experience in real estate investments, 1031 exchanges, and capital gains tax reduction strategies. Sid has helped accredited investors nationwide secure managed real estate assets, optimize tax efficiencies, and build fortified retirement plans. With a career spanning multiple sectors, Sid's achievements are impressive. He's led financial transactions worth over $1 billion, held senior roles in mortgage banking with Bank of America, and founded a charitable organization aimed at uniting global youth in service. His deep knowledge extends to fintech and AI, backed by credentials from MIT, Harvard, and a PhD program at the University of Georgia. Sid, welcome to the show.
Thank you.
Could you start off by sharing a bit about your journey across these industries and just how your work today integrates AI into these client experiences?
So my journey in the financial services sector began in 1991 when I joined MetLife in their financial services division, and really only started selling life insurance and variable life policies, mutual funds, and expanded that to include overall financial planning, estate planning, education funding, retirement planning, and then branched to small businesses providing employee group benefit health plans, dental vision, life insurance, 401ks, and all of that. And then in 1991, I launched Money Mall USA Corporation, my own financial services company. And since 2000, we have exclusively focused on private placements, private equity, real estate investments, real estate transactions, lending. So literally A to Z of real estate. And then along the way, I acquired several degrees, masters in economics, masters in education, attended briefly a PhD economics program at University of Georgia, and then attended business education negotiation programs, entrepreneurship programs at Harvard Business School, Harvard Law School, and most recently completed a 6-month diploma program at MIT about the use of AI and the AI tools and tracing the development of AI through the 50s to the present. So that's been my journey, and I stick to it.
I love it. I love it. Going back to the past, earlier when we were chatting, you mentioned the evolution from Web 1.0 to AI-powered models. Could you expand a bit on how you see AI shaping the next generation of real estate and financial services, especially with DST exchanges?
Yes. So the Web 1.0, the Web 2.0, they were literally all about providing information to people on their desktop or laptop or their, phones or mobile devices. And they did their job well. And Google and Facebook and a lot of these companies were just essentially providing access to social media, and people were just generating leads off of that. But then again, the leads were simply just leads, and they weren't necessarily qualified leads. So you were basically getting name, phone number, email, and you basically had to call them, qualify them. So that took a lot of wasted efficiencies in terms of expense of time, money, additional manpower. Now, with the AI tools, basically what 100 or 200 Google engineers were doing to design an algorithm to promote data mine and to generate leads for you, essentially that job can be done by 5 engineers deploying AI, but then the data sets and the tools that they are using, that is backed by hundreds of years of experience, hundreds of years of data. And when they consolidate all that data and feed it into the algorithmic models, so then the information is basically coming from a million minds or a billion minds. So that collective intelligence is much more greater and much more accurate than 100 engineers that Google might be paying. So that leads to the next question, that if 100 engineers or 1,000 engineers at different companies, Google, Facebook, other different companies were doing, and 10,000 engineers were getting you that information, and now only 5 engineers at each of these companies can do the same job, then the other jobs essentially become superfluous. You don't need those people. And the companies, of course, the corporate America is driven by efficiency and returning more profits to the shareholders. They always want to increase their bottom line so that PE ratios improve and the multiples prices that they get on the stock markets are higher, and that rewards the existing shareholders, the employees, and the CEOs and the owners of the companies. So that transformation is happening very fast at all levels in every single industry, not just my industry. So the financial services industry is definitely going to benefit from the advent of AI and the AI tools. So for instance, we're deploying the AI tool in terms of generating qualified, accredited investor leads of people who have the ability and the intent of being able to invest $1 million or more in our offerings. So that is huge compared to just throwing money at Google and Facebook and all these social media, LinkedIn, spending thousands of dollars and getting leads and somebody saying, how can I buy this property and flip this property? So they're not really looking to invest with you. They're just eating up your time, taking your brain for free. So we're eliminating that with AI, and we have more of a targeted outreach. And also we're inviting interested investors who would like to hear what we have to offer. So it works both ways. Essentially, we're reaching interested investors, and the investors, the general population, is getting targeted offers that are of interest to them. So it eliminates the waste of time on both sides. So whether it's real estate, buying and selling of homes, whether it's purchasing appliances, whether it's purchasing a pair of shoes, whether it's purchasing any investment property, AI is going to be specific in terms of its pinpointing the end user. And that is huge.
It's fascinating to see your perspective on just how AI has really changed the game in lead generation, moving us from broad web 1.0 outreach to this such precise data-driven targeting. It makes total sense that AI-driven tools can streamline the process to a point where You're only really reaching those truly qualified to invest at a high level, saving time and, like you said, cutting noise throughout your processes. I think you touched on something really important regarding job displacement too. With AI doing the work of entire teams, like you said, it's 100 engineers down to just a couple now. It's really easy to see how companies focused on efficiency might prioritize AI over staffing. Do you think this trend could ultimately reshape the workforce in real estate and financial services? And are there any ways you think we can use AI that wouldn't lead to such drastic job cuts? Or is that just the inevitable trade off?
Unfortunately, that will be the trade-off. It's almost like the first industrial revolution when Mr. Ford was assembling cars by hand, and then he came up with the assembly line concept. And instead of building 10 cars a day, all of a sudden they were building 300 cars a day and then 1,000 cars a day. So from selling each car at $3,000 each in the 1910s, 1900s, now they were able to deliver the same Model T cars at $300 each. So initially there were huge job losses because of the retooling of the assembly lines. All those efficiencies initially for the first 2, 3, 4, 5 years will always be inflationary. They will always reduce employment because now all these new technologies, new cars are on the road. Then the need for ancillary services arises. So then when all these cars all of a sudden started to come on the roads, so now they had to build permanent paved roads. They had to build gas stations. They had to build rest areas. Restaurants popped up along highways. Inns popped up. So a lot of businesses that were non-existent before, they all of a sudden they had to pop up because people were driving great distances. So same thing is happening in real estate, where real estate offices are going to shrink on. Now we have tools where the automated AI assistant can do the job of 5 receptionists. When you call into the real estate office to make an appointment with an agent, they can make an appointment, they can reschedule an appointment, and that's a seamless process. You don't even detect if it's an AI bot that's talking to you. But then the savings are huge. So instead of paying $50,000 a year to 5 assistants, $250,000, you can deploy the same AI robot tool from companies at $800 a month. So the savings are huge, the efficiencies are huge, the costs of time, the ability for your clients and users to reach you is very short, and there's increased customer satisfaction, right? So what that leads to my point where now we are already beginning to see in the tech sector in particular, which is obviously the first to adopt all these AI tools, and they're retooling their own structure within the companies. They're taking a systems engineering approach, and where each department used to be an independent silo and independent castle where each manager was trying to protect their territory, and we're actually inhibiting the growth of the company because of the infighting and the willingness to protect their turf, and saying that, hey, I was the one who came up with this decision. I was the one that came up with this idea that eventually helped the company. So now all these departments that were individual silos in these companies, there's not going to be any, because now we're going to take information from all these departments, combine them into the one tool, and then deliver that information to the management team, to the CEO, and the CEO is essentially communicating with the CTO, Chief Technology Officer, and the Chief Technology Officer is communicating to his team of 5 or 10 engineers, AI engineers, data scientists, and saying, hey, these are the end results we want, right? So they're essentially pulling the information from the data lakes, and they're deploying that information, putting that into an algorithm which serves the need of that particular company. and deliver all that information without any biases or without any humans fighting over who did what. So we're already seeing layoffs universally in the tech industry beginning, and they're letting go of 10 to 15% of the workforce. So eventually this will accelerate to a point where 90% of the workforce across the board in all sorts of industries, which are human central, where we still don't have the robots doing the work of humans, those humans will be let go. And there comes then the concept of universal basic income. Because what's going to happen is when all these people are let go from really nice paying jobs and they have mortgages to pay, kids to educate, their lives to live, pay grocery bills, there will be huge social unrest. So then what will the government have to do? At that point, the government will be forced to borrow and they will start to go heavily in debt. And they will have to support the population with the concept of universal basic income. So I'll tell you an interesting fact that Sam Altman, the CEO of OpenAI, he recently he's commissioned a study and he's gave them 25 million. He said, look, go to a small community and test the concept of basic income. So they went to a small community, to a town, and they gave everybody the minimum income required to be able to buy groceries and to be able to live. And they found with the study that they actually did spend the money on essential necessities, essential groceries, essential bills, kids' tuition to survive. And that was enough for them to be content and not to rebel and not to come out in the streets and demonstrate.
That's really interesting. Right. Now, so that's that comparison to the Industrial Revolution really puts things in perspective. Just as the assembly line reshapes industries and created entirely new business ecosystems, it sounds like we're on the brink of a similar transformation with AI. Your example of AI assistance in real estate is a great one, highlighting how companies can cut costs and improve efficiency without sacrificing customer experience. Now, given this new wave of change, do you think that there are any specific roles or skill sets that will become more resilient in the face of AI advancements? And for those entering the workforce now, what advice would you give to stay relevant as AI continues to reshape